Hey, this is Jeffrey Scott, and this is my weekend market update, part two for the week ending Sunday, August 17, 2025. In part one, I look at the market, identify the leading sectors. We came up with a couple of themes, themes such as solar and biotech. And today I'm going to do a quick review of maybe 5 to 7, maybe 10 of my favorite setups for the week. Again, my name is Jeffrey Scott. I am the market MRI Pro at gmail.com, and my Google group is Top Down Trader. As always, this is for educational purposes only. Anything I recommend should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You're not solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky and should always consult with your financial advisor before making trades. And I have tools in multiple platforms, but I am an independent trader. If you're looking for the wealth charts video, I'll do that later on, but it won't be posted to tomorrow morning on stocksanddocs.com. My Google group is called Top Down Trader. It's for anybody that's ever been to one of my live meetings, been to one of my videos, owns any of my tools, or just is curious what the heck it is. I use it as a vehicle for disseminating information. I don't always post my videos on YouTube, but I will post them here. If there's a change in the market intraday, I might send you a screenshot of something that has got me interested. What else can I tell you? Discounts on any of my tools that you buy, and you can always quit. And oh yeah, the price, it's free. Consider joining. In fact, if you're new to my videos, why don't you hit the subscribe button right now, hit the alarm, and if you like what I'm doing, hit the up thumb. If you have some concerns, criticisms, positive or negative, constructive, appreciated, put them in the remarks or email me at marketmripro@gmail.com. I've been mentioning this for a while. I have a meeting coming up October 27th and 28th. What makes my meeting or my trading different? So, I've been trading for 3 decades. During those 3 decades, I have exited two businesses to Syncora, formerly known as AmerisourceBergen, one business to Cardinal Health, and assisted in a business that was exited to a roll up that became Express Scripts. And the last one was exited to Magellan. I've done that or helped in doing those while I still like to trade as in a fashion that allows me to work full time. I'm a physician by training, healthcare entrepreneur, I guess is what I am now. And I have a large company with 3,000 employees today. And I still have a way of trading that keeps me in the market, keeps me aware of what's going on, allowed me to double a smaller account, $150,000 account, starting in January of this year. And I love teaching people and helping them to learn how to trade, especially people who are sitting there and want to know how to make sustainable. I want to put something that's who want to be sustainable in what they do. I'm not going to teach you how to day trade. I'm not going to teach you how to make $1 million in 3 weeks because the same guy who teaches you that will probably teach you how to lose it in the next 2 weeks. I'm going to show you how to build a strategy of trading that works while doing a full-time life, whether it's being a grandparent, which I do as well, going out boating, which I do as well, running a business, which I do as well, but still keep abreast of the market and learn how to do it in what's been for me a successful endeavor. Now, why did I call a $150,000 account a small account? Because I got some really big accounts, and it got me thinking, was it different to trade an account that you just don't have so much cash in that you just can't buy whatever you want? I mean, how many shares of Amazon can you buy with a $150,000 account when Amazon is, $200 a share? Well, it's limited. So I thought I would start an account, track it, and then report it. And my goal was to double it during the year. And if you just go back to around July 4th, you'll see a video where I arrogantly talk about how I doubled my small account in 6 months. Um, it is at the Marriott Palm Beach Gardens, October 27th and 28th. It's 15 minutes from PBI, 2 packed days of education and software. Now, my buddy John Person is having his seminar the 25th and 26th, so I purposely scheduled mine that right after so people can kill 2 meetings with one set of plane tickets. If you come to my meeting, you'll get $400 rebate towards any purchase of any tools, and really that goes on for I don't have a time limit on that. The cost is $12.50, includes breakfast and lunch on Sunday. On Sunday night, I'll take you out on Stocks and Docks, my yacht, for a catered dinner. If the weather looks bad, I'll take you out to a steak dinner and whatever else you want to eat. And then on Monday, we'll have breakfast and lunch included. And Monday night, there'll probably be a casual dinner if enough people are sticking around. The Marriott's full service, but you won't need to worry about that because I'll be feeding you. So for more information or reserve your spot, contact me, Jeffrey Scott, at marketmripro@gmail.com. Know your news and earnings. And there's one thing that I didn't talk about because I don't think it occurs to the weekend, but Powell is speaking at Jackson Hole this coming week. And I think the market is potentially going to be on hold until they hear what he says. And if what he says is consistent with that rate cut, I think the market rallies despite all the negative things that I mentioned the other day of why this is overbought, how we have divergences. I'll show you one other thing today. But I think that's going to be critical. I'm not even sure that the July meeting matters. I really don't. I don't think it's going to change anything. We know there were 2 dissenters, which is unusual. As far as earnings go this week, there's still plenty of earnings. Palo Alto Network Monday after hours, Home Depot Tuesday morning, Toll Brothers Tuesday afternoon, Target Wednesday morning, some of the biggies, Zoom, Walmart on Thursday, BJ's on Friday. And as I like to say, it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. I am holding office hours. You get the pun since I'm a physician. The link will be in the remarks section below. It'll be 7 p.m. Tuesday for August 8th. Actually, I screwed up. It's Tuesday the 19th, so let me change that. Well, I'm planning on it being the 19th. Tuesdays, I'll change that. No one's called me out on that. That's unusual. Usually people call me out pretty quick when I screw something that big up. I'll talk about market review, how I do the workflow on Market MRI Pro, sort of ask me anything, and then updates on what's coming. And then for food for thought, I want to show you this chart. This was put out by BOA. It looks at the S&P price to book value ratio, and this goes back to 1946 when you at lows 0.9, 0.9, 1.6. The highest before since World War II was 5.1 in 2000, and the dot-com crash or preceding the dot-com crash, and maybe we're going to call this one the AI crash. We're there again. I think you got to be cautious when you see this. I'm cautious. Doesn't mean I'm not long. I think short term we're going higher, but I do think there's reasons to be concerned. Let's go on to the charts. So I'm just going to go through some stock charts that I liked. So let's start with, we're at IREN. Why do I like IREN? So let's put a weekly chart up. Always the first one takes a little bit of time. I should always be doing this before I start. Come on, IREN, there you go. So this is an IPO back in November of 21, and it's been on a gradual move higher since late in 22. If we look at a daily chart, what I saw when I looked at it, I am on the road, so I don't have my usual high-speed internet. We could see sort of a cup, a handle, and a breakout. And now what I'm seeing is a breakout from a bit of a flag in the handle. I think IRN looks interesting. This represents seasonality for the next 5 years. It's not long enough to have 10. I can see down here that Thursday it had big volume. It's in an EMS buy, had a CPR buy, 2 days of big volume, breakout momentum. This here is looking at relative strength breaking above the moving average. That's relative strength versus the spider looking at IRN. So it's outperforming the spider and OBV is turning up. Up here is what I call my high jump. And when it's above 95, it means we're extended. We're not extended by my methodology. This is the daily bongo. This is the weekly bongo. They are trending indicators. So we've been in a long-term uptrend, a recent pullback, and breaking out. I think IREN looks interesting. Um, the way that I trade, I should always say this too before I talk about stocks, why I like them, I would pick a price point and I would probably want it to take out that high of Friday to know that it's not going down. And then with the volatility we have in the market, if the market opens up much lower, I probably wouldn't want to enter it up there. I got to figure out what my stop is. Um, I usually go the lowest of the last 4 bars, which would be here. So let's just draw a line across that and see if that's acceptable. So I put that here. So that line is at 1759, 1760. This line is at 2034. That's $2.70. That's like 15%. I probably would pass on the trade at this time because that's too much for me to risk. The other option would be to, this here is a chandelier, is maybe move my stop up to right below the current chandelier, and that's at 1892 up to 2034, $1.47. So that's how I would probably set. The most important thing here is number one, I like to let it trade up and into my price. Some people would rather pull back to theirs. Different strokes, different folks. Not sure which is better or worse. The second thing is I know where I'm getting out before I put the trade on. I know what I'm risking per share. Say it's $1.40 per share. I know that if I'm willing to risk $1,000, then I can buy about 700 shares. So by setting my buy stop and then my sell stop, looking at the difference here, I can not only determine when to buy, when to sell, how many shares to buy, or equivalents. So IRAN, except for the fact that I had to have a large stop, I think looks really good. Now I mentioned biotech. Now, when I think of biotech, one of my favorite biotech stocks is Regeneron or biotech companies. It's not been my favorite biotech stock for a long time. And you could see it was a major leader, running from levels here that were in the 400s all the way up to 1212. And then, like biotech, it died. Well, right now, it kind of looks like biotech is setting up to have a recovery. And in fact, you could even see that Regeneron has had higher highs, especially if it gets above this high, and higher lows off of this bottom. And on Friday, it had a momentum, a breakout in volume. Its relative strength doesn't look like it's broke out yet. OBV looks good. Not my favorite story. It's still going to have potential resistance here. But this is a historic one. Another historic great one in biotech is Amgen. And Amgen, I call this very loosey-goosey, up and down. But it looks like it's getting set to break up. But these are all well off their historical old-time highs. Um, well, I guess Amgen must have had enough splits because I remember Amgen higher, but I take that back. This is this is split adjusted and it does look pretty good. So Amgen is a stock that a breakout would be interesting, but when's that going to happen? It's not on my list. I'm just using it to show you what I think of some of the traditional strong biotechs. Another strong biotech is Biogen IDEC. Similar to the others, these things have been dead meat for quite some time. See, this one was as high as 479 and now it's running around 130. So I don't want to own these. I want to look at something that potentially could run. Now, I clicked on healthcare here, and then I clicked on biotech, and this gives me a list of biotech stocks, and I could filter them for $5 and 500,000 shares, and I might want to go down this list and look, but I don't want to do that right now, so let's just talk about what I saw on this list. Um, this is not a biotech stock, but I'm going to talk about it here anyways, because it does sell medicine for dogs. Here is a pattern that I like. So Chewy is one stock that is on my list. So let's go to a weekly of Chewy, and you could see it's had a long sell-off, but it's been in a uptrend now since March, gradual uptrend. It just broke out above the 50, had volume 2 days earlier, breakout momentum. Relative strength is up. OBV. I like this one here a lot, and I think I could have drawn a trend line, and this one's breaking out. So I think Chewy looks interesting. Now, I forgot to show you something. I'll go back to IRN in a second. Let's look at a couple others that I like in CYTK. Again, it looks like the big guys, doesn't it? It's run down. It's well below the 200. That does bother me, but it's having a nice move here. We can go up here and look at earnings. It doesn't have any earnings. It doesn't have any revenue. Icky. Why would I want this stock? Well, sometimes I want to look at longer term fundamentals. And I will go to market search and let's put in CYTK, see if there's anything there. Nope, it's not on fundamentals. So the reason I must want CYTK is news. So I can go here. And you can go back here and you could start to read what is interesting with cytokinetics and what they are looking at. And here's a meeting with the FDA coming about. But you can always click on these. And I must have been, there was something I read. Robust cash, first of many approvals this year, several potential catalysts on the horizon. That's kind of things I like to see. And hypertrophic cardiomyopathy, that's kind of the thing that kills all those athletes. So, cytokinetics looks like it has a drug for heart disease. So that's something new. Here's the short term, again, higher lows. Going to have a higher high. Maybe a breakout above the 200 would be nice, but I think that one looks interesting. Let me check them off as I tell you. So cytokinetics was one. Carvana we talked about. Chewy we talked about. Not Carvana yet. IREN. I'm going to go back there for a second because I missed showing you the best part. Remember, this was it's a utility. IPO has a relationship with the data center story. Here, this is when we talked about potentially buying out. Buying it with a breakout there. Earnings interested me. I saw 17 cents versus a loss of 27. Revenue of $18.75 versus a loss, revenue rather of 568, so that's more than a triple. And I thought, well, what does it look like on a longer time frame? And you may have caught that when I pulled this up. IREN. Look at what it's projecting for 26, over $1 with 1,457 growth rate. All right, it's trading at 20. Wouldn't a stock with that multiple deserve more than a growth rate of 20? Let's say it was 40. That's a $45 stock. So I really like earnings. I think short term it's whether I beat earnings, I surprised, etc. Long term it's fundamentals. It's what's the earnings, how are they growing? So I thought that was kind of interesting, and that's kind of why I liked IREN. Um, so within biotech, one could certainly go down the list. STOK talked about this one here when it had um, three dots and a breakout above the 50, excuse me, above trendline resistance. And this thing has had a beautiful run. We talked it about here again when it had the two momentum dots and it began its big run. STOK probably still can buy it. It's another one I think that's in the cardiac perspective. ARCT, beautiful breakout here. And continuing higher, look at the wall of volume coming in. Two blue dots in a row on Tuesday and Wednesday. Didn't do much Thursday and Friday, which means it didn't sell off when the market did. ARCT looked good. Um, Insights already run a lot, but this one I thought looked good as well. So there are several. Halo's another one that's already buyable, breaking out here. So there's several, I think, good-looking biotech stocks, but it's not for everybody because of approval risk. So you could always look at something like the IBB, which looks just like the stocks we've shown. I love it when they break above the 200, pull back for a retest, and go higher. So IBB is one way. If you want a leveraged way of playing biotech without owning individual stocks, it's LABU. All right, so that's a little bit of biotech. Another thing that popped up on my weekend review was the strength in solar. And this pattern here is what we're seeing. An uptrend that started back in April, and we'll see if we get a higher high here. But a nice, certainly could come into this one and draw a nice line underneath of support. And this thing keeps moving. Look at the volume that came in Friday, even though it was options expiration. Friday was not massive volume. So it had CPR, it had volume, breakout momentum. Look at the pickup in relative strength at OBV. So which ones did I see that looked interesting in solar? I think the the leader is First Solar, and you could see the same exact pattern breaking out. Let's just go into the longer term earnings picture. And let's see what they have here. First Solar, 50 times 23. So it's already trading, multiples 15. That doesn't make sense. How is the multiple? Oh, because it's got $12. So if we double here, so 50%, isn't that like $1,000? 50 times 22, 15 times 22 is $300. If we come close to making its earnings, the stock's going higher. Look at those earnings. First Solar, and they got the pivot set up here on market surge. First Solar looks great to me. Looks something perhaps to buy. Others in this space. How about Dairy Queen, DQ, Daku Deep Energy? Similar pattern, a little bit of a pullback. Nice move on Friday with a CPR volume breakout momentum. Not much going here with relative strength. And then Jinko Solar. And this one's right below its chandelier, but again, looks like this one's getting ready to roll as well. Don't know about the earnings on the other two. Let's just take a look and see what the longer term earnings are. JKS. Well, that's pretty nice. That's a turnaround. If they actually saw that, what would this stock be worth in 26 if it has a 100% gain and makes $1.24? Probably going higher. And DQ, not going to turn around positive. So I think JKS, but really First Solar would be my preference if I had to look at a solar stock. Now there are some others that people might think of when they think of solar. Sedgway, Solar Edge, I have names for everything. Similar pattern as the others, and pull back to the 50 and a beautiful breakout here on volume with relative strength and OBV picking up. Does this have earnings? I don't know. Let's take a look. Does it matter? Maybe I'm crazy. Doesn't have earnings, but boy, this is picking up. But look at how far this thing has fallen. And that's the problem with these, that outside of First Solar, they're all really And even for solar was a lot higher. Then Enphase is another one people like. I think I'm going to stick with JKS. It's already broken above the 200 and FSLR if I wanted to go chasing a solar stock. How could you find them? Go into energy, solar, and here they are. Now, this will probably won't happen. All right, never mind. I have one of my tools that's pretty cool that you can make an index from this, but I don't want to jinx it, so I'm not going to do that. So we looked at biotech, we looked at First Solar. Um, One of my favorite holdings that might be at a good place to add to is Robinhood. Talk about a big momentum move. Why does it look like it might be good to hold to add to? Let's just look at the last 100 days. Nice uptrend, kind of a sideways move, pull back, closed at the high on Friday, had a CPR, had volume, nope, breakout rather, recently out of a squeeze, relative strength OBV looked good. I think this one looks interesting. I've never been a big fan of Carvana because sometimes I believe what I read about some of the related companies with shared ownership. But Carvana, which has been just a huge story for such a long time, you can't make it up pulling back to the 50, just sitting there ready to go higher. So Carvana, rare earth metals are something that's big. A lot of these mining stocks. Here's one that's not. It's more aluminum, but CSTM looked interesting to me. It's up off the bottom, pull back, and it must be some earnings. And you could see 37 cents is going to come in versus 2 cents. And so there's huge earnings per share growth in this stock. And anything else I wanted to look at? Looked at side of K. Nope. So just to summarize, I think this market is at risk for a number of reasons. The extension, the divergences, certainly the Qs, Nasdaq, the number of stocks, the 13-week new high, new low at 95%. But with a probable rate cut coming and with potentially Powell signaling that cut this coming week at Jackson Hole, hard for me to be bearish. So I raised cash. I'm not short. I still have a bunch of long positions, but they've all got stops and tight ones, and I'll take it a day at a time. Hope you like some of these picks, and we'll see you Monday night, and hopefully you can come Tuesday to my Zoom call. Thank you.